Kia ora, I'm Mary Jo, Kiwi Bank economist. So there are signs that the recent policy changes targeted at investor demand are beginning to cool activity in the housing market. According to the latest Real Estate Institute data, property sales were down 13% in May. Now it looks like the tighter LVR ratio restrictions on investor mortgage lending are beginning to have a meaningful impact. While total mortgage lending from banks remains elevated compared to pre-COVID levels, we're starting to see a change in the composition of that lending. Specifically, the share of lending going to investors has fallen well below that of first-home buyers. In May, nearly 18% of new lending went to investors compared to the 20% taken up by first-home buyers. It's clear that the recent policy changes are beginning to have the intended cooling effect on investor demand. House prices, however, are proving more stubborn and slow to react. And the large reason behind that is that the market is still facing limited supply of listed properties. As soon as property comes to the market, it snapped up quick. And as a result, house price growth has reached a record high of an unbelievable 30% annual rate. Now, we do expect to see the growth in house prices begin to fade from the second half of this year. And there are a few reasons why we think that might be the case. Firstly, the recent policy changes are yet to fully play out on investor demand, especially the change in tax rules. Secondly, just as much as housing supply is the problem here, it's also the solution. And the good news is we've got new housing supply coming online. The volume of building work within the residential space is currently at record levels, and it's all happening at a time when population growth has fallen rapidly because of the closed border. At the current building rate and given low net migration, the 67,000 housing shortage we currently have should disappear over the coming years. Lastly, there's no doubt that the search for yield in this current low interest rate environment has fueled activity in the housing market. But we expect to see the Reserve Bank begin to lift the cash rate next year. So rising mortgage rates should also help to keep demand in check. That's it from me this week. I'll talk to you in the next one.